I'm happy to welcome Evan. This is Evan's second time on the podcast. For those of you who don't remember Evan's first video slash podcast, I'll link to that in the description. It's always great having Evan on because he has the same mission of helping small businesses as us, but he comes to it from a much different angle. So with that, I'm going to let Evan reintroduce himself, and thank you, Evan, for coming back.
Well, Elliot, thank you very much for having me for the second time. It's an honor. It's a pleasure to do this with you. My name's Evan Bailey. We do business loans for small businesses. We primarily focus on businesses doing any revenue between 500,000 to $5 million.
Evan, what company are you working at?
I work with Irving Fund, a small company. My boss is Scott. He's been in the industry for 10 years. Very successful. He's very straight.
Yeah, I think that's very important when it comes to dealing with anybody who is, doing anything in finance, giving out loans, anything like that. I think like the trustworthiness of the company and the person you're working with are probably the most important things because it is a very opaque industry. So last time we spoke, you had a great product for small businesses called the bulk loan. It'd be great to just get a quick reminder on what it is and how that works.
Yeah, we've had a lot of success with it, being that it's an SBA Small Business Administration loan. It's funded by banks and it's guaranteed by the SBA. Basically, why we've been so successful with it is because there's no cash flow involved, there's no financials involved. They're not even going to ask you for a debt schedule. And the loan amount is based on your revenue. 30% of your revenue capped at 150,000. You could actually get this loan up to three times.
What type of requirements are there for the bulk loan? Can you have a high credit score? How does it work? Can you be profitable? What do they look for?
Even if you do not have a profit, you can still get it done. The requirement is strictly based on your credit score. All you need to do is have above a 700 credit. And if there are multiple owners, they take the average weighted score.
That's cool. What kind of interest rates are on these bulk loans, and like how does the payback work? Is it like a line of credit where you can pay back when you want, or is it set payment, fixed payment? How does that work?
Great questions. It's a variable rate. It goes along with the Wall Street Journal prime rate. Today, the Wall Street Journal prime rate is 7.5%. Every bank has their plus, right? So 7.5 plus 4.75, you're looking at 12.25%. There is no prepayment penalty. I believe when we did this podcast a year ago, the total rate was 11.5%. Today it's 12.25. But during this time, it jumped up to 13.5%. The Fed cut rates this three times this past year, a quarter per time. So that's 75 basis points. It came down from
Nice.
3.25. And as the Fed cut rates, the banks change their rates a little bit. So it goes up, it fluctuates with the Wall Street Journal prime rate.
Right.
So
Yeah, I think with any of these types of loans, they're definitely going to be, higher interest rates than things like mortgages, but still significantly cheaper than like a standard cash advance or any loan you'll get from your POS system like Square or Shopify. Those are typically in like the 20 to 30% APR, and cash advance jump into the hundreds of percents APR. We'll go over that in a little bit. Tell us about the other type of loan that you've been working with lately that's similar to the Bolt loan, and give us more details on that.
yeah, sure. So similar to the boat loan where we're terming it the core loan. The core loan also does not require financials and does not require you to have a profit. When it's not really certain how they determine the amount that you can get, but the loan amount does go up to 300,000. Initially, the bank told us, we go up to 150, but we have gotten approvals as high as 300,000. The credit
Is this an
requirement,
SBA loan also or no?
it's an SBA loan. The credit requirement's a 680. It's a little bit lower than the Bolt loan. The Bolt requires a 700. Um, this loan does require a debt schedule. They like to have the debt schedule just to keep it on file. They're not going to actually submit it to the SBA. So what these banks like to do to be guaranteed by the SBA is just check off the boxes. As long as they have all the boxes checked and they have things on file, that's really how they're getting around with funding these, and they're happy to do it. We're happy to do it, and we know the process, and we like to help people get it done.
Nice. It's really cool. Yeah, I think anytime we see the SBA involved with anything financial, you kind of know that it's at least a decent deal. It's definitely going to be easier to get a loan from a SBA program than like going to Chase Bank and getting a standard loan. And it's going to be a lot cheaper than going to your POS or cash advances.
To your point,
Um,
people sometimes they hear SBA, oh, it's a long process. It's very hard. It's not easy to get. It's a pain in the butt. Honestly, realistically, we've been getting these done in 2 to 3 weeks. We know the process. We know what needs to be done. And it's really minimal. It's not so much paperwork. It's minimal, and there's no financials involved, which makes the process so much smoother because a traditional SBA loan, there's financials involved, there's DSCR, debt service coverage ratio, where they're seeing how much profit you have and to see if you can cover the debt ratio, whether you could pay it off or not.
That makes a lot of sense. One type of loan that we're really familiar with that we like to, tell people to kind of stay away from, but they're not the worst, are the POS and credit card processing based loans. So you have, Square, Shopify, Stripe, all these companies are offering loans based on the amount of volume you do. Typically, they'll say like, pay a 10 to 15% fee back over 6 to 12 months. When you really dig into the numbers, those loans look at like they end up being like a 20 to 30% APR, which is a lot more expensive than these SBA backed loans. So we always recommend people just, go to Irving Fund, go to a different company like that and go get an SBA loan. It'll be a lot cheaper. Might not be as easy, but it'll be a lot cheaper. There is one type of loan that we always scream and yell from the rooftops that merchants should never take, and those are merchant cash advances from random companies out there. And just quickly remind us why merchants should stay away from MCA companies who are promising, quick money in 24 to 48 hours.
It's just a way to dig a deep hole for yourself. The way APR works is a little tricky. APR is an annual basis, right? When you're taking out these loans, let's say you're paying it back in 30 weeks or 40 weeks, the APR on that is closer to, 50 to could be even 100%, depending on what the deal is.
Right. So these are companies that'll call you up, say you need 50 grand, pay us back 70 over, 8 months, paying 40% fee over 8 months, which really, when you think about it, comes out to probably close to 100% APR again, because you're only paying it back over 8 months. You start paying it back immediately. A lot of these companies really have a lot of hidden fees to just basically screw a small business out of money. Anybody who's offering you quick, fast money, 24 hours, big amounts of money, dangling money in front of your face right away and just saying, here, we'll get you 100 grand within, 2 business days, just run the other way. I think a really good thing to just go by is like, A, is it a reputable company? Are you dealing with Chase Bank? Are you dealing with Bank of America? And if not, are you dealing with a program that's from the SBA, which is backed by the government? And those are really the things you should look out for. Cost of capital is extremely important if you're taking a loan. There's no reason why you should pay $30,000 or $40,000 in fees on a $150,000 loan when you can pay $15,000. You just basically keep the difference in your pocket. Anyway, thank you so much, Evan, for coming on. Hoping to have you on again soon. Again, this was Evan Bailey from Irving Fund. And thank you.
That was a pleasure. Thank you, Elliot.